Welcome to the risk events video for the week beginning the 6th of July 2015. Now this week's video is a little bit late because obviously we wanted to wait and see the outcome of the Greek referendum. This whole situation in Greece is basically what is dominating the markets, in case you haven't already realised that. And so what we want to do is just give it, let the markets open and let's just see the reaction of the market and the analysis from the experts, just to kind of see, get a feel for the situation in Greece, and so we can plan our week better. Now, if we first of all start with our news feed, if you go to the news feed, you'll see there's lots of analysis and research on the Greece situation. But this article here does sum it up quite good, particularly in terms of planning our week. Basically, there's an analysis on the Greece situation, and it's simply entitled "What Next?" And there's basically 4 steps, 4 or 5 steps that are coming up that are going to be pivotal in this situation. So the first one is that the Greek political leaders will meet today, which is Monday. They'll meet on the 6th of July, have their meeting. Now, Varoufakis resigned, of course, after the Eurogroup basically requested that he wasn't involved in negotiations. It was felt that he was a bit of a loose cannon. He would basically hamper negotiations. So they got rid of him, and they're hopefully going to put someone in place who's more conducive to doing a deal. So that's the first thing that's happening. So they're going to meet and discuss all that and figure out who's going to represent Greece around that negotiating table. Once they've done that, or while they're doing that, number 2, the German Chancellor Merkel and French President Hollande are meeting in Paris. And at the same time, Juncker, the EU Commission President Juncker, is holding a conference with Tusk and ECB President Draghi, and of course the Eurogroup leader Dijsselbloem. So they're all having a meeting as well. And then basically when all those 3 parties have had their discussions, an EU summit will be convened tomorrow, which is Tuesday the 7th, at the close of play. They will then discuss everything, get back round that table and try and figure out what to do next. Now, while all that's going on, it is important to bear in mind that the debt obligations of Greece are still piling up. So if we look here, you can see the dates. 10th of July, they've got some refinancing to do by selling some bonds. The 13th of July, they've got a 450 million euro payment to the IMF. Bearing in mind they already missed a 1.6 billion payment to the IMF at the end of last month. Then, of course, they've got lots of coupon payments going through for the 14th, 17th, 19th and 20th of July, which are the payments due and outstanding on the bonds that they've already issued. So basically, they've got quite a lot of money to pay over the course of the next 2 or 3 weeks. So that's the thing. So not only have you got this whole thing, negotiations continuing, you've got the no vote kicking off, which basically means that the Greek people have said they don't want austerity. So where does that leave the situation? Lots of unanswered questions. No one really seems to know what's going to happen next. Does that mean that Greece are going to leave the EU? Some people are saying yes, some people are saying no. It's a bit of a mess. And for that reason, we're basically looking to stay out of the markets because the volatility, could be massive. And this is just an unprecedented period of time. We've never, ever been in a situation where, a member countries have been on the verge of leaving the euro and the EU as a whole. It's totally unprecedented, and as such, it's very, very dangerous for trading. My best advice is just stay out and watch what happens, and just watch, basically, as the market reacts. So that's the first thing we need to have in our minds as the week kicks off. That's what's happening in Greece. That's the order of play as it stands. Now, if we go through the day-by-day calendar, we can see we have got some risk events coming out every day. But bearing in mind, before I begin this, I'm not expecting much of a reaction or market movement from any of them because of the situation that's in play at the moment. That's the biggest, most important thing to say. Now, on Monday, we've got Canadian Ivory PMI. We've also got ISM manufacturing from the US and, of course, business confidence from New Zealand. Unless there's a massive, significant deviation, I'm not really expecting any of these to move. And if you are going to trade a deviation, you want to make sure you're trading in line with the fundamentals. So we're looking for a big negative deviation on Canadian PMI. We're looking for a positive deviation on non-manufacturing PMI from the US, and of course we're looking for a negative number, i.e. something lower than previous or much lower than previous on the business confidence from New Zealand. If we go to Tuesday, we can see we've got a cash rate decision from Australia. This is not expected to be too market moving. The Aussie dollar, US dollar finally hit that 75-cent mark. We've been kind of waiting for that for a good 3 or 4 months. It finally happened over the weekend. It dipped just below that 75-cent mark against the US dollar. Now, in terms of the cash rate decision, not really expecting too much to happen from this. Expected to hold their rates at 2%. RBA rate statement expected to kind of continue jawboning the currency. They're going to try and get it weaker. They're going to try and get it below that 75-cent level as much as they can. But ultimately, not really expecting them to say much or anything new. No one's expecting any more moves on the rates until we've had a few months just to see how the last couple of rate cuts from Australia play out. Then moving on to later in the session, we've got manufacturing production from the UK. This is expected to come out significantly better than previously. It was a negative reading previously. It's expected to pop its head into positive numbers on Tuesday this week. If that happens, that could be a good opportunity to look to buy pounds. However, there is a risk on the pound that this euro crisis could leak over and affect the pound in the short term, only in the short term. But again, it's so unpredictable. It's very difficult to determine what will happen and what the impact on the markets will be. So it's worth putting a warning out there. But in normal circumstances, this would be a good little risk event to trade because we're expecting positive data on a positive currency. So that would be, a decent one to get involved with normally. But obviously this week it's a different case, so you just want to be at least extra cautious and definitely make sure you've got your fixed stops in place. Then of course we've got that Euro summit that we spoke about earlier, and then we've got trade balance figures coming out from Canada and the US. Again, unless there's major deviations, I don't really think any of the data is going to be market moving this week, unless something radical happens in Greece. But I think the focus is going to remain on the whole thing in Greece, what's going to happen next. Everyone is literally on the edge of their seats trying to figure out what the next step is. So that's pretty much where the market's focus should be. Wednesday, the 8th of July, we've got the annual budget from the UK. This is expected to be, obviously from the Conservatives, the first all-Conservative budget for about 18 years, almost 20 years in the UK. So we're expecting a Conservative-type budget to be released. Lots of talk about possible tax cuts, welfare reforms as well in the UK. So that's going to be one to keep your eye on. Again, I don't really expect it to be too market moving because I think in the market's kind of got quite fixed expectations to what's going to come. Generally seen as pretty positive for the economy overall. So I don't really think it's going to be too much in the way of that, the pound being supported over the next few months. Then, of course, we've got building permits from Canada. Again, we're going to need a big deviation away from the previous number to get any kind of move going. And then on later on in the session, we've got FOMC minutes from the US, which could provide a little bit of insight. But again, I don't really think it's going to provide any information that the market hasn't already factored in. So again, it's very much a time period at the moment where we're all about the deviations. The focus on economic data changes from month to month. And at the moment, it's all about deviations. So if the data comes in as expected, with this Greece situation kicking off, I don't really expect too much of a reaction. However, if we get a big deviation, we could get some sentiment for the session that you could use to possibly ride and make some pips. But that's about it, really. If we go to Thursday the 9th of July, we can see we've got a lot more data coming out then. We've got Australian employment data, got employment change and unemployment rate. Unemployment rate expected to tick higher. Employment change is expected to be significantly worse than it was previously. This fits with the kind of neutral / bearish view we've got as the Aussie dollar at the moment. Long-term fundamentals don't look that hot. CapEx data a few months ago revealed that, there's not very good sentiment in terms of the investing sector. Businesses aren't really investing and trying to push forward for growth over the coming year or two. That shows concern about the economy, which of course usually translates to an actual slowdown. So if businesses are feeling concerned, then consumers will be concerned, and of course the central bank will be concerned, hence the rate cuts we've already had, and this data here, the expectations for this data kind of fit in line with that. So I think from this point on, from Australian data, it's all about what the RBA do, what the central bank do, rather than what the data says. Everyone's kind of expecting negative data. And again, the Antipodeans are going to get hit the hardest because they, even though the Aussies have cut their rate, those currencies, New Zealand dollar, Aussie dollar, still have probably the highest rates in the developed world. So when it goes risk off, when the markets show concern and get scared, they're the currencies that get sold off first of all. And as we've seen with this, as this Greece situation has kind of unraveled. Then we've also got Chinese CPI expected to tick a little bit higher. Over the weekend, the Chinese bank, or the Bank of China, injected significant liquidity into the markets to halt the big sell-off on the Shanghai Composite Index, which actually dropped below 20% in the last week or two, which is technically or like officially a bear market. Now on the open it rallied about 8 or 9%, so it looks like it may have stemmed that tide for now, but there's a risk if a central bank looks desperate, the market actually takes advantage of that and trades against it even more aggressively. So it'll be interesting to see how that situation with China plays out, but at the moment it's far removed from having any kind of impact on the Aussie dollar or any of the currencies for that matter, because of everything else that's going on. Later in the session, we've got the bank rate from the UK. Again, not really expecting this to change. We've got the MPC rate statement, if there is one. Sometimes they don't release one. If there's something to be changed, if there's something that they want to add, then there'll be a rate statement. If not, there probably won't be, and this will kind of be a non-event. Of course, unless we get a shock deviation, a change in that rate or a change in the bond purchases that the UK have been employing. Finally, in the session, we've got unemployment claims from the US. This is a regular data point every week or two, so it's not really something that we pay too close attention to, and it's not really something the market pays too close attention to. It's marked as high impact here, but generally doesn't really move the markets just because it's out so frequently. If we go to Friday the 10th, we can see the only data we've got really is from Canada. We've got employment change, unemployment rate. This is expected to tick worse. It's expected to worsen and basically, well, if you look at employment change, you expect to go negative. We had a pretty big one, 58.9 thousand previously. It's expected to drop to minus 4.5 thousand. The unemployment rate is expected to tick higher to 6.9% from a previous 6.8. So this matches. This would be a risk event we could normally trade into, sell Canadian dollar into this event, but the problem is, what currency do you sell it against? We've got massive volatility on the euro. We've got big volatility on the dollar. The Japanese yen is a safe haven currency. It's very difficult to try and figure out which currency to trade against these things in the current market environment. So I just want to reiterate how dangerous it is out there to be actively involved in the markets. And if you are in the markets this week, that's fine, but just make sure you're using a fixed stop, because the market could easily whip one way then the other, or just as easy as it could take off in one particular direction and not come back for a good few weeks. So you want to make sure you're protected. Later on in the session on Friday, we've got Chairman Yellen, or Chairwoman Yellen, I should say, speaking from the Fed. This is at the end of the session, so I don't really expect it to have too much of an impact on the market. Most of the trading desks will be closing down for the day, either at lunch or going home for the weekend. No one's going to really want to put on new positions over the weekend. So I don't really think this is going to be too impactful, but it's worth keeping an eye on anyway, just in case she does say something kind of a little bit random that could be possibly traded Sunday and Monday. But apart from that, not really much going on. So the overall theme of the week is, there's lots of data coming out, but will it move the markets that much? And will it override that volatility that we're seeing, particularly on the euro-related pairs, after all this Greek situation kicks off? Remember, whatever happens with Greece is going to have a wider impact with Europe, and then whatever happens with Europe is going to have a global impact, and it will be something the Fed are watching. The Fed aren't going to want to hike rates if Europe descends into chaos. The global picture is all very interrelated, so this does have a big far-reaching effect on all the currencies one way or the other, so it's definitely worth keeping an eye on. And like I say, probably best to err on the side of caution, but if you do see a trade opportunity, that's absolutely fine. If you have conviction in your position, take the trade, but just make sure you're protected in the worst case scenario that the price volatile, the volatility moves the price against you a significant amount in an unexpected fashion. Okay, so that's the risk events video for the week coming up. All eyes on Greece. Keep your eyes on the news feeds, and let's see exactly what happens and how this situation plays out. And hopefully, once it's done and dusted, there'll be lots of opportunities to come back into the market with more confidence. And I do believe once all this is sorted, and over the next week or two, or a few weeks, however long it takes, there will definitely be trading opportunities. There's several currency pairs that are really under and overpriced at the moment based on this volatility. And I can't wait to get back in on once all the dust has settled on everything that's going on at the moment. But we'll cover that over the coming weeks. We'll go into more detail on that when the time is right. And until then, stay safe, and hopefully, if you can use this information, hopefully we can make some pips as well.